And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California, where it is another beautiful Friday morning. Happy Friday. So let's get right into it with Bitcoin today. I want to cover a little bit of news here. Barron's Magazine reported yesterday, which is a financial newspaper and magazine that I happen to respect. And here's what they said. The Biden administration is preparing to release an executive action that will task federal agencies with regulating digital assets such as Bitcoin and other cryptocurrencies as a matter of national security. A person familiar with the White House told Barron's, right? So national security memorandum is expected to come out within the next few weeks. Would task parts of the government with analyzing digital assets, something they don't even understand, and assembling a regulatory framework regulatory framework that covers crypto assets, stable coins, NFTs, and non-fungible tokens. So check that article out on Barron's. We'll go ahead and post the link in the description below. And so why is this important, really? When news drops like this, the expectation going into it versus what actually is decided, right? Which versus what actually comes out of this is going to be the driver of the event. So basically, we don't have anything to go off, except we already expect that the government is going to regulate digital assets. And I frankly see this as actually a good thing. The reason I look at this long-term as a good thing, because it provides clarity for a very unclear subject with regards to how accounting, how taxes are done, how all sorts of moving parts in the crypto sphere are operating right now. And well, that will likely allow for a spot ETF to be accepted right now, which I don't think any of them are going to get accepted right now. Perhaps later this year, I do think there's a chance. But for right now, the people I really look to trust in their analysis, in these sort of more ephemeral events is this, that the purpose of the last 2 years, right, was to really wash out and clear the way and pave the way for a more regulated crypto space. And what does that essentially look like? Well, we're talking about getting rid of these wild west crypto exchanges, right? These exchanges where you can get up to 100x leverage with no KYC, right? The days for those guys are probably over soon, sooner than later, probably, sadly, right? And likely it leads up to a more legitimized crypto space and infrastructure that gets built around, these sort of rails around the crypto sphere. So yes, I do think at some point the spot ETF will, get accepted. But really this to me looks like it's just going to legitimize the space. And obviously, if it wasn't going to be that, right, if Biden was just going to come out and ban Bitcoin, which the IRS already said, or Gary Gensler, I believe, the SEC chairman, said they're not going to ban Bitcoin. So I don't think that's going to happen. And so if that doesn't happen, whatever he says is essentially going to be positive. And well, again, you don't regulate something or ban something, right, that you're going to end up using, right? And so this is more long-term encouraging thing. This does sort of offer up, some potential downside volatile moves in the short term, which I'd like to take advantage of. And we're going to document that. And yes, I do think in the description below, for those of you who want to give a shot at a leverage exchange where you can get wrecked and lose all your money, no, in all seriousness, don't go over there unless you already have a winning documented strategy for trading. It is not wise to be going off on any leverage exchange and basically gambling, right? Not wise. Why? Because 80% of traders never have a net win in the long term unless you've gone back and tested your strategy and, done all the work it takes to become a successful trader. And, Then what do? After back testing, you do forward testing with a small dollar figure. And if you're happy with the results, right, then, well, then maybe you want to give it a shot. But just going on leverage is not going to make the magic happen. It's, as a matter of fact, you're probably going to lose your whole stack. So yes, go punt it over on Bybit if you want, 100x leverage. But again, I don't recommend it. And so again, when you have an event like this, I like to play on the peripheries, right? I like to take the easy trades on the outside. It's like taking candy from a baby. And so let's get right into it on the kind of short-term time frame ranges and look at our 4-hour here. And I'll just pull this 4-hour back up here. And so what are the 4-hour ranges? Pretty much the same over the past couple of days here. 39,200 to the upside, and then you've got 34. Call it, is that 34? My eyes are hurting me today. I am operating on a lack of sleep. There's very few times in the year where, we get these volatile moves, and this is typically when I like to do most of my trading personally. And then, hey, we'll have some times to just sit and relax and hold long term. And well, trading to the downside is a lot funner than trading to the upside. Anyways, I think, where we're at right now, personally, I think we are a lot, more likely to swipe the lows again, somewhere around 33.7 before we head back up for a bounce. What else news came out today? Apple posted some phenomenal quarterly results, or, some phenomenal iPhone sales. Personally, I just picked up this iPhone 13. The Pro Max thing, and the picture's so clear, I don't even like to see all the wrinkles in my eyes. And it's just getting old here. But back onto Bitcoin. So I think, 33,700, we head back down there for a bounce, which is frankly the opposite of everything else I'm hearing out there. Everyone else just wants to say, hey, Bitcoin's going up today. It's going to bounce. It's going to bounce. Well, why is that? Well, let's bring it down to an hourly here, and we'll tighten up the range just a little bit here. And we'll say any kind of an hourly closure below there or above here, very, very likely. So an hourly below 35.5 gets you down to 33,200, and hourly above here very likely gets you up to that 39,250, 3,300, 39,300 area. And I could be wrong, and that's why, we have invalidation points. And technically speaking, if you look at this guy, we do have the yellow 21 crossing the green 55, and that is your buy signal typically. And then you put your stop market, somewhere around there, and you look for a move to the top side of the range, which is going to be, it's going to be heading up to about 38.3. But why did I think this thing is going to come down a bit more? Let's take a look here. Stokes. So volatility is going down, and then we've got, it's just a really sloppy chart. So I wouldn't trust anything right now. I would head back over to the 4-hour and say, hey, look, 4-hour range is going to be a little bit stronger, and basically, 4-hour closure back above 39, call it 39,200, very likely gets you a move back up to 41.3, and I do think that would stretch you all the way back up to that $44,000 region. Okay, and then, what else do we want to take a look at today? Oh yeah, some of our underlying market dynamics. And again, open interest here is coming in at 9.9 billion, which is slightly down from yesterday. We have been talking about wanting to see the price reset. Excuse me. Let's draw it out like that. So we want to see open interest come back down for the real reset to happen, and it is ticking down a bit. So somewhere between 8 and 5 billion would let us know probably a macro low is going to be put in. Okay. Next underlying market dynamic we check in on is the leverage ratio, which is, I mean, you can see here, it's just to the moon. We're levered to the hills. It's down a little bit today, 0.20, but still very, very high. So a big move is going to come. When we do break these ranges, a big move is going to come. And I do think we are going to probably bounce to the upside first before heading back down. But that's we'll let price action decide. Price action just trumps everything. The other one we want to look at is our funding rates here. And funding rates are still negative, so people are paying to go long. And then and that's probably what people are doing. Right now, after Bitcoin has done something like this, let's look on our other chart. Nothing like a nice, clean, fresh chart. But look, Bitcoin from the high to the bottom right now, it's down 50%. So is it worth it taking a shot down here where, I think your downside is, maybe 10%, maybe 10, 15%. But your upside bounce, I think we are going to get a nice size bounce from 37 here to at least 52, somewhere in that range. That's a 37% gainer. So, some people are taking a shot right now, and I know a lot of friends of mine, they're breaking the lock off their wallet and adding to some of their long-term hodling positions. So, I'll leave it up to you what you think. Post a comment below. Do you think it's worth taking a shot now or waiting? And again, let's look at the daily on our bull trap area, what we were talking about yesterday. And how do we do that? Well, this is the Fibonacci retracement tool. It's there, and it's there if you set up a TradingView account. And what we want to do is take a look at our breakdown region, which is right around here, our daily breakdown region. So we broke down from that level right there. I'll zoom in a little bit more. So here's your breakdown. And if we do a Fib retracement and we go from the closure to closure, that is coming in somewhere between 46 and 57,000. Sorry, 47 to 50,000. Where do I want to put this? That was the breakdown right there. And these do like to line up, real nice right here, the green 55 and the purple 200. And so on a weak bounce, right, it won't even get over the 236 or the 382, okay? But traditional bull traps happen right at the 682, between the 0.5 and the 682. So if Bitcoin does want to put in a lower high somewhere around here and do something like this, we get a bounce up. Oop. Let's try again. Bounce up. And then come back down. Back below 45,000. That'll be our confirmation bear trap. And very, very likely, we're going to go retest these lows somewhere around, 28 or 29 to 30,000, somewhere in that region. And do I think it'll break it on the first pass? No, I don't. I don't think that will happen. I think, I think what's more likely to happen if we do want to play out this bear trap or bull trap, as we're so to speak here, it'd look a little bit more like something like this, right? So what happens is you get this little bounce, very similar to what we saw in the past, but what it looked like, it would look something like this. Boom. We come back down. Oh, we hit the 30,000. Oh, we come back down, 30,000. Oh, I think it takes some time to go ahead and break down. And then, as we said on the monthly time frame, I think worst case scenario for Bitcoin is something like this, where Bitcoin on the monthly time frame, why is that chart not working for me? Yeah, right here, somewhere around 22 to 24,000. Would be on a closing basis where I think worst case scenario Bitcoin could end up if we do want to play out this bear market, which again, I don't, we don't have a crystal ball here. All we do is we got some lines and some charts and some TA and some past experience, right? So what else was I going to talk about? Okay, so that's kind of the doom, right? Like nobody wants to see that, but it could happen. So we want to be aware of where these, support and resistance levels are. Okay, next thing, what did I want to talk about? The hopium, right? Let's give a little hope here. So what would Very similar to what we saw back here, right? Is we got the breakdown, we got the, the little fake out, the little bear trap, in fact. And then we get the higher high, and then what do? We put in the higher low, and that's coming in right at the 382, I believe. Let's see if we can line this up. Yep. And it'll be easier to see on this chart because I don't have it all marked up. But right from our breakdown region there, right? Fib retracement down from the bottom. So as you can see, right, here's what where our bull trap area would have been. It can go up as high as the 782, right? So we had the first test at the 0.5, and then we got the bounce off the green 55. That was a perfect buy signal, by the way. Then we got the move back up here, and then as we came back down to the 382, what do? We bounced. So very, very similarly, if we want to move this guy over here, very, very similarly, right? Here's the hopium, right? Bounce. Okay, let's draw it again. Bounce. 618. Oh, and then we come back down to the 382. There's our hopium. That's what we want to happen. And new all-time highs. And Bitcoin rips and roars and goes to some new all-time highs. And maybe that happens around April or July this year. Sometime after they begin to taper, or sometime after Powell decides not to taper. I don't know. But that's the hopium. You got the doomium on the other side. And, again, if we do want to break that 29 to 32,000, I would expect, Bitcoin does probably tag 22 to 25,000, and we could get some wicks lower. But that's going to take a very, very long time. So again, Joe Biden regulations, right, does this announcement, right, it does supersede, and I heard it might be today. I don't know if it's going to be today or next week or in a few weeks, but as Barron's Magazine said, he might say something today and then, give a firmer stance in a couple weeks. But I don't think they're approving, companies like Coinbase to go on the NASDAQ and the new futures ETF, right? If they weren't planning, if they were planning to ban Bitcoin, they're just planning to regulate it, which is a good thing, right? The more regulation, the more clarity we have, the more safe people feel using this asset. So what else did I want to talk about here? We got the daily Stokes, the stochastics. That's our momentum indicator, right? So stochastics are crossing up here, and that is very nice. So daily Stokes are up. We're still in the midst of a downtrend. Volatility is pretty high right now, 78%, and that's usually kind of the end of a move. So is this the end of this little bounce, and we're just going to get rallied off the 9 exponential right there? I don't know, but I'm kind of leaning towards that. Maybe we get up to 39.5 and we hit the 21 just like we did here, but I'm kind of bearishly postured. At the other side of the fence, so this bounce is just, corrective. That's it, right? We're still in the midst of a downtrend. We're not taking out. We're not, showing any signs of reversal. First sign of reversal on the daily would be a daily closure above 44,000. Okay. So on the 2-day, a little higher term time frame, the 2-day Stokes. 2-day Stokes are going to be crossing up with any kind of a closure above 37,250 today. So could we do it in 7 hours and 32 minutes? Very, very likely. I think that is a good possibility. Okay. Now let's take a look at the 5-day. Now the 5-day Stokes, these are important because this is a much more powerful time frame. It's almost like a weekly, and they will flip up for the first time in the last 4 or 5 months, closing on Sunday. This will be closing on Sunday, so 2 days, 8 hours from now, Pacific time. That's 5 p.m. Eastern, and the last time they crossed up, and that would be with any kind of a closure above 35,000, 35,500. That will cause these guys to cross up. And why is that important? Well, the last time these guys crossed up from this low of a level was going to be 2018 macro cycle lows. And where was that? 2018 macro cycle lows. Let's see if we can make it a little easier to see. Am I helping us or am I hurting us here? 2018 macro cycle lows were right here. Oh, that would have been a nice buying opportunity. So where was that? Last time Stokes were that low was way back here. Boom. And also, that's very similar right here, October 2019. What happened there? Let's see what happened. Stokes crossed up here, and it took a little while to get us going on this rally, but boom, that was a big rally, right? October 2018, that was the other one right there. So we crossed up at about 3,600, and that rallied up to 13,000. So that was a pretty big move, right? And then back on, just in case, I've always found this really helpful. There's a symbol called BLX. It's the longest standing price action for Bitcoin. It maps it out all the way back to, going to the dawn of time, pretty much, of Bitcoin. And that was the macro cycle lows back here, October 2014. So that would have been, where would that be? October 2014. And Stokes, yeah, October 2014 right here. Gosh, I really want to help you guys and make this legible. There we go. So Stokes are way, 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 way down there. October 2018. Oh, that's 2015. Here we go. October 2014. And gosh, I'm really struggling here with these lines, making them bigger. Okay. So you can see those Stokes crossed up right here. Where did they cross up? Right there. October 2011. Excuse me. October 2011. Boom. And what happened to Bitcoin's price? Oh, you can't even see it. It's on the page. It went up so much. Look at that. Look at that. So as you can see, 5-day Stokes crossing up is a very positive thing, and that's why I am in favor more of a bit of a bounce here. Do we play out a little more downside down to 30,000 first? I would love that, but between 30 and 37,000 is not a big move. From 30 up to 45,000, that is a 50% move. That's why I'd love to see it come swipe down a little bit lower. With NASDAQ popping up here 230 and Bitcoin at 37,110 on the hourly, where are we at? We're getting rejected off the Purple 200. So, yeah, so we had October 2014, 72% rally. October 2011, if you bought Bitcoin in 2011, we wouldn't even be talking, right? Because you'd be millionaire, billionaire, right? All you had to do is put a couple bucks in. So the question is, again, does the bounce hold, right? Once we get this bounce, does the bounce hold, right? Does the bounce hold above 44,000? So again, here's that daily breakdown level, right? We need to get that first higher high. Once the bounce comes, is it going to make another higher low and give us a clear trend reversal on the daily or on the weekly? And all this plays out. Oh, I've got to go to a meeting. Okay. So again, until all this plays out, we're all talking about air. We're talking about ideas. Again, it's not financial advice, but hopefully this gives you a picture of what I'll be looking at over the next few months. And that said, again, I am running out of time. So we're going to catch you tomorrow or this weekend with a little more longer term price analysis. Happy Friday. Have a blessed one and take care.